Meta platform stock price has plunged about 44% since September last year. Yet, in its latest result, Meta platforms show some mixed messages. Its revenue rose about 20% year-on-year to $33.6 billion, which actually beats analysts' expectation. Its operating margin and net income both fell. Its earnings per share dropped about 5% to just $3.67 per share. And unfortunately, that misses the analysts' expectation. All this might not be that big of an issue for the company. However, after a deeper dive into Meta's earnings report, I like to review 5 warning signs for future investors before you invest. But first, hi guys, I'm Stanley, a co-founder of valueinvestasia.com, an investment portal where we give you investment news and in-depth analysis on listed company every single week. So if you're new to this channel, remember to hit that subscribe button so you'll not miss out on any of our videos. Now, let's dive into Meta platform. Number 1, lower growth rate going forward. For the first quarter of 2022, Meta is expecting its revenue to be in the range of just 27 to 29 billion for the quarter. And this is a growth rate of about 3 to 11% year-on-year. Comparing that to the 48% growth in the first quarter of 2021, CFO Dave Wehner admit that the company is facing some headwind for both its ad impression and also price increases. On ad impressions, the company expects increased competition for people's attention span and also a shift towards engaging more on videos features like Instagram Reels. But Instagram Reels also monetize at a much lower rate compared to newsfeed and stories for now. On the pricing side, the company expects growth to be negatively impacted as factors like cost inflation and supply chain disruption are impacting the advertisers' budget. So before this guidance, investors are expecting Meta's first quarter revenue to grow around 27% year-on-year. So that is a huge drop for its guidance of just 3 to 11% growth. And number 2, Apple is flexing its muscle. One of the key reasons for the slowdown is due to platform and regulational changes for their targeted ads. And this is because of Apple's recent privacy changes on iOS. CFO Dave Wehner warned that Apple iOS update, which allow users to opt out of data tracking features, could reduce Meta ads revenue by up to $10 billion, which is about 7% of its projected revenue for the year. So Apple iOS changes will cause 2 major impacts on Meta's business. Firstly, it will affect the effectiveness of its targeting ad algorithm. Meta will now have to figure out how to better target ads with less data of the user. The second issue is that advertisers might see a drop in their conversion rate or their return on investment for their money spent. This might make advertising on Meta's platform less attractive than before. And now let's look at warning sign number 3, declining users. Meta's total monthly active people across all its platforms, which is Facebook, Messenger, Instagram and WhatsApp, actually increased 9% year-on-year to about 3.6 billion during the fourth quarter. Within that total though, Facebook is still the largest platform, seeing about 2.9 billion monthly active user. However, Facebook daily active user declined about 500,000 people from the previous quarter. This is a big deal as it marks that the platform's first sequential loss in daily active user. This is the first time ever in its history. And the loss of active user was mainly due to a drop in interest in the US and Canada market, which also happened to be its most valuable market for now. Meta explained that the decline was due to a huge increase during the pandemic in previous quarter. However, there are also challenges in other markets like India with increased telecommunication fees and, more importantly, competition from platforms that are targeting younger audience. And that really brings us to warning sign number 4, TikTok. TikTok, merrily sings the clock. According to a Piper Sandler's latest Talking Stock with Teens survey, a mere 22% of US teens choose Instagram as their favorite social media app, putting it in third place behind Snapchat and also TikTok. Over the past few years, video-first platform like TikTok has really gained popularity due to faster internet connection and also better phone cameras. And with growth starting to flatten out for Meta, the company is going back to its core competency: copying. So Instagram has now launched its short video features known as Instagram Reels. CEO Mark Zuckerberg also admitted that apps like TikTok are growing very quickly, and Meta really need to strengthen its short video services in order to remain competitive. However, he expects this strategy to reduce its near-term ads impression as video are slower to monetize. And lastly, the final warning signs we need to take note of Meta is the Metaverse itself. In the last quarter, Meta finally reviewed its Reality Lab revenue. This includes its virtual reality and augmented reality products for the first time in the fourth quarter. This segment revenue rose to $2.3 billion in the full year as it sold more Quest 2 headset. However, its net losses also widens to $10.2 billion, and the losses should continue as Meta continues to expand more and more into its VR and AR business. In the past, where its higher margin advertising business was still growing fast, we might not notice this huge money burn in the Metaverse business. But with the profit machine now struggling as well, investors might start to wonder if it is wise to invest so much into VR and AR right now for Meta platforms. Therefore, with all these concerns, Meta's stock price has fallen to a valuation of just 16 times its earning, one of the lowest points it has ever been. The stock looks undervalued compared to its blue chip technology peers as well. However, I continue to hold on to my Meta stocks, and here is why. Firstly, their entire family of apps still serve about 3.6 billion people every single month. That makes Meta the company that serves the largest audience in the whole world. That massive audience gives Meta one of the best advertising platforms for advertisers. So I am expecting that the growth could accelerate again if it is able to find a solution to the recent privacy change on mobile operating system. Although Metaverse seems to be a far-fetched dream right now, its long-term bet on the Metaverse might actually pay off. Meta's strategy for its virtual world might be similar to its strategy when it comes to building up a social media platform. It wished to own the ecosystem, then giving it pricing power over everything that happens within it. For example, in the Metaverse, we can now exist digitally as avatar and the ability to teleport from different worlds and experience. And we can also buy and sell digital goods within the Metaverse. If this whole Metaverse is owned by Meta platform, then it will be able to earn from every transaction that's happening within all virtual worlds. More importantly, Meta is also owning the headset, Oculus. If the company can make Oculus the de facto device to enter into the Metaverse, this means that Meta will no longer be subjected to third-party operating systems like Apple iOS, and it can then set its own rules and regulation. So what do you guys think? Remember to share your thoughts about Meta platform with us. Is this a stock that you will invest in right now? If you have gotten value from this video, I hope you give us a like and share it with a friend who you might think will benefit from this as well. If you're ready to take the next step into investing, you can always check out our free investing course at valueinvestasia.com/free course. There you can learn practical skills like reading a financial statement to even how to value a stock. So as always, till we meet again, my name is Stanley. Invest safely.